what is a real-world asset?
Well, there's no quite clear legal definition.
Can an NFT, under any circumstance, be a security?
So therein lies the problem. There was quite a lot of industry debate around Mika versus Micah.
Essentially, there was a big explosion of DeFi.
Well, welcome everyone to this podcast. We are here today to talk about the wonderful world of law. So without further ado, I'd like to introduce the panel.
Hi, I'm Sharif, Head of Tech and Innovation at Defactor.
Hi, I'm Deborah Hutton, Managing Partner of DH Law, a new fintech financial services regulatory law firm in Dublin. And also I'm one of the founders of Reclosure Limited, which is a fintech company which will be tokenizing real-world assets.
So maybe that's the way to start off, is the question of what is a real-world asset? It's a wonderfully vague kind of term, and if you ask 4 people on the street, you get 4 different answers. So maybe that's where to start off today, Deborah. What do you think a real-world asset is?
Well, there's no quite clear legal definition. So when we're talking real-world asset, we're talking something off-chain, such as property, something that's real. And I think when we look at DLT and we think of things like cryptocurrency, so this is something that's real and tangible. Okay.
And what do you think that a real-world asset is, Sharif?
Yeah, the whole RWA acronym, my wife's in banking and she keeps telling me we have it totally wrong. It's risk-weighted assets rather than real-world assets. But essentially there was a big explosion of DeFi and people seeking yield. A lot of that was based on smart contracts and yield upon yield upon yield. The whole RWA narrative came about because they were looking for products to capture yield that was being generated in the real world in the productive economy, and providing that into DeFi protocols. So that's where it kind of stemmed from. Capturing stuff in the real world, bridging it between Web3 or DeFi. But what is a real world asset? I mean, everything could be considered a real world asset now, from cryptocurrencies to real estate to collectibles to financial instruments.
So it's a large variety of things that we'd say are in the productive economy and are off chain. And then I suppose we can then have a look at how they fit into different categorizations, because in the real world, to use an American term, not everything is a security. You can have a lump of coal, which is a commodity. You can have a lot of lumps of coal securitized into debt. So, and everything in between kind of exists. So maybe if we could start off with Ireland and look at how, in a general sense, we try to pot real world assets into categories for legal compliance.
Well, that's
where do we start?
Broad question from a legal perspective. Yeah. So maybe if we take an example of from investment funds, and we look at asset classes. So you would look at some asset classes which would be deemed to be more risky. For example, property, investment in loans. So if we look at regulated structures, the only ones that are allowed to invest in those will be qualifying investor funds, because there's a higher risk, but obviously that can be managed in terms of managing liquidity, risk disclosures. And then if we look at other asset classes, listed equities, bonds, things that are more liquid and apparently lower risk, that would be on the UCITS side. Then you can look at art. Again, that would fall into the higher risky QUAF, or you could have commodities, or you could have anything, whiskey, you name it, you can have it. We are now seeing certain regulated funds that are allowed to invest in cryptocurrencies, but to a small percentage. But that again will be on investment funds that can invest in these particular asset classes. The reason I use the investment funds example in terms of regulation of asset classes is not all activities going to be regulated, because are you invested in that asset class as part of a group in a collective investment scheme? Is there a raising of finance from the public or from private individuals? How are you, or is it a group of people coming together in a joint venture, or are you just providing services like acting as an architect or collecting rents? So It's just how you approach and what you're doing with that asset class. But as a rule of thumb, when we're looking at asset classes, you're wanting to assess risk, liquidity, and how you're raising finance. And then we look at how the regulation works there.
Very good. So we're already seeing how real world assets are a very large categorisation of every type of asset under the sun, really. So I suppose when you talk to people in the industry, a lot of what people talk about is it a security or is it not? So maybe we can tackle that one now and look at what a security is, or what your interpretation is here in Ireland, and unpick a little bit what is a security. That's, we'll say, old law. It's been around for ages and ages, and it's tried and tested.
And maybe why does that matter? Why do we care?
From my perspective, as a lawyer, but also in business, the question of whether an asset is a financial instrument / security.
A financial instrument being the European term.
Yeah, we'll come back to that. Versus not is one of the key questions on the table. You get this wrong, and you could face criminal and civil sanction. And we talked about that scale of riskiness, one versus the other. In general terms, well, not in general terms, in specific terms, anything that's classified as a financial instrument / security is highly regulated. Anything on the other side that is not classified as a financial instrument, so if we stick with digital or virtual assets, you're looking at utility tokens, is on the scale of less regulation or no regulation. So the type of regulation, for example, in Europe, when you're looking at, is this a financial instrument? You're looking at MiFID, you're looking at prospectus directives, you could be caught under AFMD, you could be caught under UCITS, you could be caught under multitude of regulation. And we've seen some case law in the US where even top lawyers and judges are debating this. So there's a question and a misperception that the question of what a financial instrument / security is has only become complicated because of digital assets and DLT. That is not the case. For my sins, I've been in financial services and financial services regulation for more than 2 decades now. And this, even in traditional finance, is a major question.
Yeah. Where does it begin and end?
Where does it begin and end?
Yeah.
And now what's interesting in the digital asset space is, and back to what you were raising, is why does this matter? So I've talked about the regulation, but there's a bigger reason this matters. Because once you're in the regulated space, we talked earlier about raising finance. If we're looking at a security, now we can raise finance on a larger scale where it's regulated. So industry's really welcomed regulation. But the problem with this definition, and unfortunately I brought some paper because for my sins I am a lawyer, we need to understand specifically what the problems are, how to address them, and how to move forward on this, because real money can be now made. And we had sort of discussed before this, seeing tokenisation in Ireland and why Ireland's going to be a good hub for that. So, but even before I start into that, I would like to say, well, why should we start, and this is another debate that's been out in the market, why should we tokenise assets? You've got securities law. Why should we do something else? And what are the benefits even of doing this? I'm just going to very briefly, because again, well, I said I'm working as one of the founders. I'm on legal and compliance and reclosure. There's the business people, and I will not pretend to be a business person. But why is tokenisation of assets important? It can enhance liquidity. You can get fractional ownership. You can have automated compliance and efficiency. There's a global reach, but also cost of doing business. And as I said, I started talking about regulated funds and other structures, but the ongoing operational costs and the return to investors really challenging. So now I'm going to get into the definition of financial instrument.
Okay.
And what is a financial instrument? Now everybody thinks they know what a financial instrument is. So what do we think a financial instrument is?
I think I'd look to MiFID.
Yes, very good. And
yeah, so me being the technology, I don't have a definition of what a financial instrument is. I think it's a product that people
A
are
name
investing.
a financial instrument that people would be familiar with.
A share perhaps, or a bond.
Correct.
And what's fascinating about this is even under traditional finance, that has been debated. And when we look at, as you rightly point out, Brian, in Europe, we're looking at MiFID as to what a financial instrument is. And there would be very limited guidance from ESMA, which is the super body of all the member state regulators who come together and offer guidance. But pre-ESMA, there used to be CSER guidance, where the debate of when can a share not be a financial instrument in traditional finance. So I'm going to read this out under MiFID, and forgive me for being so boring. We're looking at MiFID 2, and it provides a definition which includes transferable securities, money market instruments, units and collective investment schemes, options, futures, swaps, forward rate agreements and other derivative contracts relating to securities, currencies, interest rates or yields, or other derivative instruments, financial indices or financial measures which may be settled physically or in cash. Then there's derivative instruments for the transfer of credit risk, financial contracts for differences, and various other items that meet certain conditions of, and here's the problem, of being traded on a regulated market, MTF, multilateral trading facility, or OTF, organised trading facility. So therein lies the problem and the debate when we start looking at tokenised assets. And that is only one aspect. So it's tradability. But the other aspect is you're now dealing with uncertificated securities. And what does that mean?
Yeah. So can I ask, maybe this can be a standalone question, and because I know the answer in Switzerland, and in Europe it's one that can spark off a huge debate, so we might keep it short. So under the definition of MiFID that we've just gone through, is an NFT, which by definition is unique and is not tradable in a market because there's no market in a unique asset. Can an NFT under any circumstance be a security or a financial instrument?
There was quite a lot of industry debate around MiCA versus MiCA, markets in crypto assets, as to whether NFTs
were qualified there as well.
Yeah. And the train of thinking is no, they should not be classified as securities. But the nature of these type of assets, you have to look at it, unfortunately, on a case-by-case basis.
Looking at the substance over form.
And the nature of those assets change. And we talked about the European definition, but if we look at the Howey test in the US, it seems to more focus on the purpose and is it for investment purposes. So these are different tests, and therein lies not only cross-jurisdictional differences within Europe, but you're looking at Asia and you're looking at the US and you're looking at a multitude of laws in terms of where you're raising finance. So I know I've evaded that question.
I thought you were going to ask me about the different types of NFT protocol, but anyway.
Feel free.
This is where you do get into it. You have different types of NFTs with different types of technologies that then represent assets in different types of ways. So I know it's a hard question.
Okay, but to kind of bring it down to something a little bit simpler for an entrepreneur or a new project, how do they navigate this? They don't have in-house legal. They're doing their best to stay compliant, especially with known projects based out of Ireland or Europe. But they're looking to set up and trade or have solutions globally. How do they stay in the green lane?
And to plug my law firm, DEH Law, not only is the world of finance changing, but we can look at the rise of AI and even remote working and how people's patterns are changing. And you've mentioned sort of in-house legal. How do we navigate it? The first thing is you will need legal advice. End of. So how do we get a solution to that? And there are different models out there in terms of working with legal advisors on a more cost-effective model. Okay, and you should be pitting as part of that advice on a practical basis, template contracts that say these are the things to watch out for changing. These are FAQs. Again, I work with Blockchain Ireland. There's a lot of, and that's a great industry body in terms of sharing information to the market. And I believe at the moment, membership's either free or certainly it's very small amount. So that can be very helpful. So engage with industry bodies, engage in fixed fees, work very closely with the law firms as to different models. Because, it's a competitive market out there. And also, when I sort of work with certain partners, people can be on part-time and you can get actually top quality. I do think as part of that ongoing and future-proofing, we do need to see more guidance from regulators.
I think as a small project, and Sharif is speaking from a lot of these small projects are technical led rather than we'll say legal led, and I think when they look at the size of the legislation and the size of the various interpretations that are out there, sometimes that can be an overwhelming challenge almost for people to try and get their heads around. So I would say, when I'm looking at it, I think, yes, you have to engage in things like that, and you have to start with something and iterate from there.
Yeah, I think that is a really interesting point. I always think it's the business case drives the legislation because law doesn't fall from the sky. And I think the importance of these projects, and certainly as a lawyer, I sit with the business to understand not what they think the law says, not anything. What are they doing? Understanding the model, understanding the technology, asking the questions, sitting together so that we try and speak some form of a language where we all understand each other. And any piece of legislation that I've worked on in the last several decades, we look at there was issues on EMIR, AFMD, UCITS, also, on MiCA, also on VASP, also every piece of legislation. Where the errors sit is a misunderstanding sometimes of operational issues and technology issues. And that is why that interaction, it's not the lawyers that can drive it on their own. And that's why I mentioned that industry debate and the absolute requirement to be transparent about risks and issues and what cannot happen immediately and what things look like, and comparing it to traditional models that people have maybe examined and making that process easier. I've often found that it's the business that identify these issues, and then it's the lawyers to help translate and transcribe and structure that solution.
Okay. We've been talking for a good while now, and it's fascinating and very, very detailed, but we have to call it a halt today, and I think we could keep going for a very long time. So I think in the future, Deborah, we'd be delighted to have you along again for future podcasts. And we'd be also delighted to hear from the community if there's any questions that they would like us to discuss in the future. But thank you very much for coming along. I think the whole question of what is a real world asset and where does it fit into the world of law is one that we'll come back to.
That's key. Thanks very much.
Thank you.
Thank you.
Thank you.
Great.
Thank you.
This podcast is for information purposes only and should not be considered as financial advice. Please do your own research